Hello and good morning. Here we are. It's another beautiful day in South Florida, although today it's supposed to rain, so maybe that's going to give us a clue on what's happening in the markets, right? They've been really volatile of late, and I'm here with my Dunkin' Donuts coffee. I am Kenny Polcari, your host of the party, and today is Thursday, March 24th, 2022. And so what is it? What is it that we need to know? What happened yesterday? What's happening today? So yesterday, stocks fell as investors rethink some of the issues that are surrounding the markets. Yet this morning, stocks are rising as confusion reigns. Oil surges another 4.7% yesterday, and overall commodities rose by 2.6%. New home sales fell as mortgage rates rise. Hello, there's a connection there. And Ukraine crisis is now 1 month old. And what are we having for dinner? We're going to have the cauliflower risotto with truffle butter and shaved Parmigiana cheese. It is delicious and simple to make. Okay, look. Yesterday, stocks went into reverse and they fell broadly across the board. Suddenly, the algos just weren't sure that they should keep creating buy orders in light of a more aggressive Fed, rising energy prices, ongoing supply chain issues, a marked slowdown in the U.S. economy, and surging inflation. Fed fund futures are now pricing in 8 rate hikes this year, which means we're going to get an off-month increase considering there's only 6 meetings left, and we've already had one, right? The Fed projects, though, 6 more rate hikes, which would be 1 for every meeting that's left. At this point, though, does it even matter whether it's 6 or 7 or 8? That makes no difference. The Dow lost 450 points, 1.3%. The S&P down 56, the NASDAQ down 190. The Russell gave back 38 points, and the transports gave up 300 points, or 1.8%. The 10-year Treasury yield backed off a bit, ending the day at 2.29%. That was down from 2.35 the other day. Oil soared higher, rising 4.7%, or $5 a barrel, to end the day at 114.5. Gold rose by 1.2%, or $23 an ounce. The Bloomberg Commodity Index rose by 2.6% to end the day at 128.38 as it churns at the highs well above all 3 trend lines. This index includes corn, wheat, soybean, hogs, cattle, aluminum, nickel, steel, platinum, copper, coffee, sugar, commodities. Kavish? Now look, there are regular calls for $150, $200 a barrel of oil by the end of the year. And if we continue along the path we're on, we're going to get there by the end of May. I mean, in 1 month, oil is up 30%. So if we continue to push at that pace, then we'll be up 150 by the end of April and 200 by the end of May. Yesterday's surge being credited to the news that Russian oil exports via the pipeline from Kazakhstan to the Black Sea may temporarily fall due to some storm damage by about 1 million barrels per day, which equates to about 1% of global demand. Now you say 1%, that's no big deal. And maybe under normal circumstances, it wouldn't be much of an issue. But that is not where we are right now. The tension is high. The air is really thick. You cut it with a knife. And so the reactions are exacerbated. Supposed repairs on the pipeline could take months, according to Vlad, right? Think supply chain shortages on the parts needed. Or think that Vlad may not be in such a rush to get oil to Europe, causing Europeans untold pain on their pocketbooks. In any event, rising oil prices are causing gasoline prices to rise, and that acts as a tax on consumers. But Governor Gavin Newsom from California has a plan, as well as the Democrats, right? He's going to issue $400 debit cards and give it to anybody that owns a vehicle to help them fill their tank. And considering that gas in California is over $7 a gallon, and the typical car takes 18 gallons, it costs $126 to fill your tank. So $400, yeah, that's good for 3 tankfuls, right? That's about a week and a half. So how's that working for you? As you might imagine, utilities, the XLU and energies were the only 2 sectors that rose. Utes because they're considered defensive, and they rose by 0.2%. Energy up by 1.7% because that surged. Losses led by healthcare down 1.8%, financials down 1.8%, tech down 1.5%, communications down 1.4%, discretionary down 1.25%, industrials were down 1%. And the short hedges all gained, right? DOG, PSQ, and SH were all up 1.3%, and that makes sense because the market was down 1.3%. EcoDaddy yesterday showed exactly what I've been warning you about. New home sales fell by 2% versus the expected increase of 1.1%. And that should not be a surprise at all. Rising mortgage rates and supply chain issues continue to cause concern in the housing sector. I mean, look, here's the simple math. A $500,000 home with 20% down means you have a $400,000 mortgage. 2 months ago, you would have gotten a 3% rate on the $400,000, and that would have equated to $1,686 a month to carry the mortgage. Today, the same mortgage, you're going to get it with a 4.5% rate, and that equates to $2,026 a month, or a 20% increase. And if what we expect to happen actually happens, then next month, that same mortgage will cost you 5% or $2,147 a month, a 27% increase over the 3% rate. And that's before the taxes, homeowners insurance, and turning on the electricity. And if you heat your home with oil, oh boy, are you in for a surprise. And that's a $400,000 mortgage. The numbers get even more exaggerated the bigger the mortgage. So should we go there? I didn't think so. So expect housing prices to begin to retreat as talk of 50 basis point increase in interest rates in May and June marinates through the system. And remember, mortgage rates are very sensitive to the daily moves in both the 10 and 30-year Treasury. On the geopolitical agenda, the war in Ukraine is now 1 month old, and Vlad is not happy. Ukraine is pushing back and pushing back hard, and that's causing Vlad to be humiliated on the world stage. He has now put chemical weapons and nukes on the table as an option if he needs them, knowing that this should cause global leaders to stand down. But will it? Joey's in Brussels at a trio of meetings, the Emergency NATO Summit, the G7 meeting, and a meeting with the European Union. The G7, which is the US, UK, Canada, France, Italy, Germany, Japan, are all prepared to warn Putin against the use of either chemicals or nukes. And if he does, then he has crossed the red line. But what does that really mean? Obama drew a red line when he was president over Syria, and when they crossed it, nothing happened. So while it sounds dramatic, Vlad is not changing his course due to any red line because he doesn't believe anything will happen. U.S. futures this morning are up. The S&P's trying to hang on to that long-term trend line at 44.74. Last night, we closed at 44.56, just below the line, but still above the short-term trend line at 44.20. We are at an interesting point. The range between the short-term and the intermediate trend lines was 44.20 to 45.48. We are at 44.56, smack in the middle. The key levels to watch are 44.20 and 45.48. Why? Because if we fail to hold at 44.20, then expect a renewed push lower to potentially test the lows of March around 4,200. Because technically the market would be broken and buy-side inline supply would dry up, leaving avoided prices causing stocks to fall. And a push up and through 45.48 could see us challenge 4,800, which are the January highs. Why? Because technically we were broken up through all three trend lines, and the algos will see this as a positive, causing buy orders to be created and inline supply to be canceled, leaving a void in prices on the way up. So you see, this whole supply chain issue, it's also an issue for stocks when you talk about algorithmic trading. Eco data today includes the usual suspects. Initial jobless claims of 210,000, continuing claims of 1.4 million. Then you're going to get durable goods, expected to be down 0.6%. Ex-transports are up 0.6%. Capital goods ordered of plus 0.5%. Capital goods shipped of 1%. And the S&P Global U.S. manufacturing PMI of 56.6 and services PMI of 56. Both expansionary numbers, but trending lower. Remember, 50 is the neutral line, and sub 50 puts us in contraction mode. European markets are all lower this morning as investors there are following the trio of high-profile meetings. NATO Secretary General Jens Stoltenberg announcing that the alliance is prepared to commit major increases in troops along the eastern borders. At 7 a.m., all European markets were lower just by about 0.3%. Not crashing, just a little bit of pressure. Bitcoin this morning is trading at 43,000 and Ethereum's at 3,100. Those are up slightly over last night. In the end, remember, investing is not static. It is dynamic, and it's long term. The issues surrounding the markets right now will fade over time. They will, but right now they're going to continue to cause volatility in the months ahead. So you need to stick to your plan. You need to have names that will provide stability in an anxious environment. So big, boring, and beautiful U.S. mega cap names will protect your capital in an anxious time, right? Talk to your advisor. Give me a call. I'm happy to talk about it. All right, what do we have for dinner tonight? So I'm making cauliflower risotto with truffle butter and shaved Parmigiana. It's delicious. It's simple to make, and it presents beautifully, all right? And like I said, you'd have to stand there and stir because that's how you make risotto. But other than that, it's simple to make. So for this, here's what you need. You need a diced big Spanish onion. You need olive oil. You need salted butter. You need 2 cups of arborio rice. You need a half a cup of dry white wine. You need cauliflower florets cut into bite-sized pieces. You need about a thing of warm chicken broth, right? Warm it up on the stove. Don't boil it, just bring it warm. You need salt and pepper. You need truffle butter and shaved Parmigiana cheese. Now, in a big pot, you want to heat the olive oil and put some butter, regular butter, salted butter, in the heavy saucepan and let it melt over medium heat. Add the onions, and now you're going to cook those onions, chopped diced onions. Cook those onions maybe 10 minutes until they're nice and soft and tender. Now you want to add the arborio rice to the onions and the butter and oil. You want to stir it and get the rice all coated. Let it kind of brown, get a little bit toasty, just a little bit. When that happens, you're going to add the wine, and you're going to continue to cook until the wine is absorbed. Now, begin by adding 1 ladle at a time of the hot chicken broth, stirring frequently until it's almost completely absorbed before adding another ladle. Continue to cook the risotto in this manner, adding broth 1 ladle at a time until the rice cooks. It should be about 25 minutes. While the risotto's cooking, now heat some more olive oil in a frying pan and now add the cauliflower. Cook over medium-low heat, adding a tablespoon or 2 of the broth just to help it cook, and the cauliflower gets tender and just beginning to turn a little bit golden brown. Then remove it from the heat and just set it aside. After cooking the risotto, like I said, for about 25 minutes, it should be tender to the bite. Taste it. Make sure it is. If it isn't, cook it a little bit more. Add a little bit more broth and cook it a little bit more. If it is, now stir in the cauliflower. You want to season it with salt and pepper. Taste it. Make sure it's all good, right? Taste it first and then season. Once it's well mixed, you want to serve this risotto in individual bowls, drizzling the top with either truffle oil or, better yet, a spoonful of the truffle butter, right? Just put it right on top of the hot risotto, and it melts and it permeates the risotto and the cauliflower. Oh my God, delicious. And then you want to garnish this with shaved Parmigiana cheese, not grated. You want to shave it, right? So you want the shavings of Parmigiana cheese on top of the hot rice with the truffle butter, and it starts to melt into it. And then when you stir it up on your plate, delicious. In any event, like I said, the day's getting started. It looks like it's going to be a little bit of a stormy day here in South Florida. We'll see if it's the same for the markets. In any event, until tomorrow, take good care.